Okay, everyone, let's start with the webinar. Hello all and welcome. Hello to the guards again. Vicky, Maud, Adina, how are you? Hope everything's fine. So I will start, I will place a chart for the euro dollar, the forward chart, just to leave something on the back, right? You know that while several experts start their webinars, talking about the disclaimers about how risky Forex is, I usually start with another kind of disclaimer, right? And I believe it's worth to repeat. Remember that any trading strategy that you learn in here and from this side of the screen will depend on the charts. And charts will depend on the broker, right? If you have a broker in Australia, it won't be the same chart if you have a broker in the United States or the United Kingdom or in China or whatever. So unless you backtest any trading strategy you learn, you won't be 100% sure of how that strategy works. Remember to backtest any kind of strategy you learn in any kind of webinar, okay? Anyway, the idea today is talking about some short-term trading strategies, either for sideways markets or for trend markets, right? I guess that's maybe one of the simple parts of the trading, right? And rather determine if the market is moving sideways or if it's moving in trend, right? In this particular case, I chose euro because after almost 3 months of sideways movement in the 300 pips, we are now in a clear bearish trend. I guess that as more we learn, the worse becomes our trading, at least over the first year of trading. I'm talking of myself experience. Please correct me if I'm wrong. But as you start to learn, right, as we start to trade Forex and see a price chart for the first time, we usually have the one idea that as many indicators, the better, and as much information, also the better, right? So when we saw a trend, we start to wonder either if we are at bottom, if we're not at bottom, if we are in a complete stage, if it's going to bounce, if Greece is going to leave the Eurozone, if Portugal and Ireland will follow, if Spain is going to go on strike, and blah, blah, whatever, right? All of that information, and as more we learn about the market, the more complicated it seems to be trading, right? But as many of you also may already know, practice help us to change that idea, right? And slowly we learn that the hard part of this profession is turning complex into simple, right? I believe that what will really help us to think the right way, right? And as I always say, the right way to do is to use no more than two technical indicators for your trading analysis, no matter if it's an intraday strategy or whatever you prefer, right? It's first of all determine the trend, right? Whether the market is on trend or it's moving sideways. There are several ways that I don't want to go too deep into this, right? Because I guess at this point we all already know that we can determine a trade either adding, I don't know, maybe a moving average, right? My classic 21, right? And follow the slope of the moving average, right? As the moving average heads south, we know that the bearish trend remains in place. When the moving average turns flat, we may consider that a reversal may happen or some consolidation. But when finally it turns south again, we know the trend has risen. I will move a bit the chart, right, to show you how mostly flat was the moving average over the time that the euro was trading mostly sideways, right? Slightly bullish. Always remember the 45 angle degree, right? If the slope is not above 45, then the trend is not that strong. Anyway, the moving average will be one of the first things that is quite simple to read, and it will tell us if a trend is there or not. If price is below and the moving average heads south, then the bearish trend is strong. If the price is above and the slope is strong, the trend is up, right? If the moving average is flat, There's no much definitions in the market, and we are moving either side of the board, right? Anyway, I believe that, as I was saying, a visual simple method, consists first of all having a map, right, of the territory. Okay, this means determine the key factors that will move a certain currency pair, mostly when we are talking about trading short term, right? So, which will be the key factors of the day? Knowing the fundamental news to be released could be one not so important these days, because I guess that there's no need to say that fundamental news are not actually moving the market, at least not too much the trend ones, but market is mostly moving on sentiment, right? Market sentiment. So at this point, I rather take a look at how stocks are moving than to see the actual numbers of the ratings. For example, we have a very negative durable orders today in the United States, right? It was pretty below expectations. However, stocks managed to bounce and remain in positive territory, and that's the main reason why the euro has spiked, among others, right, to above 26, right? In the short term, I mean, because stocks were positive. Right now, if stocks are falling, maybe that's the reason why it's currently falling as we talk, right? Because it has lost several pips since we started. Anyway, the idea is that we need to be aware of that. What are the key factors that move the currency pair from a fundamental side, right? In this, and from, of course, from the risk sentiment involved, right? And then determine the trading zone. I believe that the first thing we need to do when we start our trading day, no matter what time of the day it is determining that trading zone. This means, at least for me, knowing the key support and resistance for the day, right? So we must take daily charts, 4-hour charts, try to find out where maximums and minimums are inside the usual range for the chosen pair, right? It's worthless to see that this particular pair, the euro dollar, has a resistance around 133, because at this particular moment we are 500 pips away, 800 pips away, and who cares about the 123, right? I had to assume that this particular pair will move in an intraday range of in between 80 and 120 pips, right? Let's say a 100 average. So I will look to the upside from 100 pips levels, and the same to downside, no more than 100 pips, right? So in between those levels, where are the free zones to trade the pair? Where are the levels or the style or the areas where price will move more freely and won't face the fight in between offer and demand, right? So this is important because it's the only way to avoid jumping into a movement, right? Without taking care of the key points of or the hour of the day, right? That's something also for me important. But if we jump into a movement just because market is moving, and it's like selling today around 25.10 because it was 21.20, let's say, because 25.15 was the daily low, right? Let's say that the pair accelerated lower and we are seeing the pair falling, and we will probably jump into the selling position in the 25.20 level, only to find out that the pair finds support 5 pips lower and bounce higher. It's the first time in almost 2 years that the pair reached the 25 level. We know that round numbers tend to be strong static support areas of resistance, right? So it was pretty clear that the pair will probably bounce from that area. So either wait for bounce to get into the market, right? Or if you have some technical indicator that pictures you the overbought or oversold readings in the short term, maybe that level will show you. We will see it right now. Give me a second. Will show you that the pair was extremely oversold, that it was not right hand. But it's a pretty common mistake we all do when we start trading, right? Jump into the movement, not know that a strong support is quite close in this particular case, and get trapped in a trend that it's maybe favoring the trend, right? But it has been keeping us for the last 6, 7 hours in the negative side, right? And we start desperate and get anxious and maybe close the position or take bad decisions or wrong decisions based on an impulse and not a trading system, right? That's what I want to say. Anyway, terminate stops and resistance area would be the first, no matter which technical indicator you choose to use in your trading strategy. Okay, once you have determined your support and resistance levels and the market condition, either if it's trendy or if it's sideways, the last thing to complete the map would be select a couple of technical indicators, right? And of course, it's a time frame in where we are going to work, right? I believe that will depend, of course, in mostly in our own behavior, right? If we are getting too anxious with market movements and we can't stay too long into the market, I guess that trading short term will be quite interesting at the beginning. I have been saying, I'm just going to share this silly thing right with you. I have been telling for, I don't know, maybe 6 months that the US Swissy growth, right? Remember, it was tapped around 2010, okay? It was not going to move anywhere from that level, right? And I still do believe that it's not going to move anywhere, right? However, when it reached 120.10, right? A friend of mine took a buying position, right? He said, it's not going to fall, it's paying me swaps. So with one day, the market, right, or the Swiss National Bank intervenes the Swissy and changed the peg to 125, which everyone is expecting except the Swiss National Bank, right? I would make a lot of money. Anyway, we've had today's spike on rumors of taxes in Switzerland, right? And jumped to 120.70, which is 60 pips away from the entry point. I say, okay, you're profiting. No, I get bored and I close the position. That was the answer. Right? And what's that the answer? I get bored and I close the position. So that's what we need to understand when we decide which time frame are we going to trade. If we're going to trade Euro Swiss in mostly to the upside, we can expect to be out of the trade in the next 2 hours, right? Not in the next 2 months. If we are waiting for that pair to start, we need to be understood the fact that it will probably remain where it is for several months until we see some life with the pair or a crazy spike that we saw today. But, however, it's temporal. I believe that the pair lows off, right? Most of the ground, yeah, it's back to 2020, barely 15 pips away from where it started today. Anyway, sorry for that. I'm going everywhere. Back to what I was saying about having a map about the fundamental and the sentiment and having a couple of technical trading, a couple of technical indicators. As easier and visual the map is, right, the better will be your trade. There is no such thing as it's better or more sophisticated, right? The best trigger is the one that you can use effectively, okay? You don't need to follow advices that you could not apply daily basis, right? Simple in this market means more precision and more accuracy in your trading, okay? So simplify and plan your trade. Get into the market only in the predetermined points, right? Remember the 3 zones in between support and resistance area we were mentioning a few minutes ago, and don't run after price explosions. Sometimes that happens at times of the day that have no much volume, right? And trading the hours, we all know there is plenty of that, right? Meaning early London, American opening, not American noon. We know that around this time of the day, for example, market tends to sleep a bit, right? Because Americans have lunch, no one is trading around, London is leaving. Okay, so then we will have another jump of volume when the Americans get back from lunch, okay, but not much. When the American session closes, we have practically none volume except for a couple of crazy days, and then back when Asia is in full volume with the Nikkei and the Kospi opening, right, we have another spike in volume. So be aware of that. Be aware of the times of the day you spend into the screen, okay? Try to stay out of the market 10 minutes before fundamental news is going to be released, if you are a short-term trader, of course, and keep the market after those news in between 15 or 30 minutes to test new and set the trend, right? That's, for me, it's really important. As I was saying, today we had a bad reading in durable orders in the United States that was supposed to bring stocks down, right? And then trigger dollar gains, and the fact is that that did not happen because stocks were mostly bullish, and the market has lost the panic it had yesterday, right? I do believe that the most important thing to do is establish small targets, intraday targets, right? Establish one small objective, and I believe that it's even better if you write them down, okay? So if you are just starting to trade, right, don't think of 100 or 50 pips in a trade, or even 20, right? Try set yourself on a target of accomplishing 5 pips a day. Yes, I know that sounds crazy. It's just 5, but get those 5 daily basis, right? If you could do that in a whole month, then spend the second month trying to make 10 pips a day. But don't even think of trying to catch a full rally from bottom to top, as many beginners do, right? Without knowing how to do that. If you can grab 10 pips a day the second month, right, you will not only be building your self-confidence, but understanding how the market works. So try to set small targets. Write down if you can accomplish or not them, right, and how and why you fail. I believe that that's pretty important. And of course, those those pips, right, will be taken with following the certain strategy you have chosen, and in the free moving areas, right? Anyway, if you want to get more than 10 pips a day, then, right, you should use the tool, and you must know the numbers and probabilities tool has to offer, okay? That's what I always say. Indicators are only tools. We need to know the numbers and probabilities those gave us, okay, doing back testing, the average pips the signer could offer in the selected time frame, where to place the stop, how long can I stay into the market, how many consecutive losses that system has, where is the reasonable take profit for the certain pair and the study, and all the information we need to complete a trade. A trade is not just deciding an entry point, it's deciding where that trade is not longer valid and setting my stop, and also a limit where I will profit, okay? Okay, I'm not really talking too much. I will check if you have questions. Okay. Oh, okay. Sorry, guys. My voice was fading. Are you still hearing not well? Okay, does this sound better now? That's a 20 simple moving average. Boyki, sorry. Voice was fading. And go off, go near a microphone. I'm quite close to the micro. Okay. So it was just a spike of weakness in my mic, right? Anyway, it's not important which kind of moving average you use, right? It could be a 20. I will tell you that if you want to set a moving average to determine a trend, use 20, 50, 100, 200, the classic one that everyone looks at, right? Because everyone will be looking at those, right? So it's probable that if everyone's looking at the 20 and the price is unable to overcome the 20, right, the price will continue falling because the ones that are along there will probably profit. and the ones that are not there will probably be selling, right? So I believe that using what everyone else uses is the best. Okay. Anyway, I will add a couple of things, short things. Okay, I will delete this moving average. Okay, I will add a couple of short steps, and we will jump into a trading strategy. Okay. Remember that no matter what your filter, your system is, you will need a filter for your system. Okay. So a price filter would be the number of pips necessary to consider a support or a resistance broken. How can we determine? Let's say, I would say, I remember I said 133, but let's say that the immediate support for the euro dollar would be, I don't know, let's say 25.50. Okay, that will be right. This is the first support we have in the euro dollar. I will refresh the camera. Simple moving average, Boyki, not exponential. Okay. Anyway, okay, let me move the chart and enlarge it a bit. Okay, there we are. Anyway, let's say that 25.50 is the immediate support for the pair, right? As an example. What I need to do to confirm that the support is broken? Wait for a candle opening below it, or what, right? One of the systems, right? It took the pair, on the study, okay, and know how many pips it average moves in the hourly chart, mostly if we're trading short-term, right? So if we move to the hourly charts and do the math, we will find out that in average, the euro dollar moves 30 pips, right, in 1 hour average, right? We have late American afternoon that it barely moves 10, or early Asia, and the same goes before London opening or American lunch time, right? So let's say average, we have 30 pips in a year. So we can say that for 1 hour charts, right, a right price filter would be at least at 20% of that distance, right? Meaning around 6 pips. So we will consider a support or a resistance broken when price passes for at least 6 pips, right? If we are seeking for a rally of 20, 30 pips, which is the average the pair moves in the early charts, okay, we will go for 20%, 6 pips, right? So if a pair loses right now 44, oh my god, what a day I'm having, 25.44, right? We will consider the 25.50 support broken. A 20% of the average of the movement, okay? If we are talking about daily chart and we consider pair moves 100 pips a day, that 20% will be 20 pips, right? So when we are trading the daily, we will need at least a pair to move 20 pips away from that so-called support of resistance to confirm it's broken, right? The second thing to take care of is that regardless of what we have been seeing in the market over the past couple of days, right? 60%, 65% of the time the market is moving sideways, right? And the rest of the time we only see fast movements either side of the board. Our job is to find signs of that movement before they take place, right? And that's why we have to draw that map I'm telling you about and plan trades completely before beginning to trade. Anyway, okay, the idea is to show you one trading strategy I find quite interesting for the hourly chart. Of course, not to apply it when the market is moving quite sideways like it is right now, okay? But the idea is, of course, always to determine first support and resistance levels, and then, okay, try to find signals that give us entries inside, in between those supports and resistance levels, so we can grab our pips, right? We can also, sorry, I forgot to say something about the filter. That's the way we talk about 6 pips, right, in the early chart, about static support or resistance area. Remember that moving averages can also be considered dynamic support or resistance levels, and Therefore, a break of such a candle opening or the 6 pips is also a valid way to terminate is broken, right? It will depend on ourselves. I don't actually believe there's just one way to do things. It's just that we need to find it best for us right now. I don't believe that. I also don't believe that there's a better way than the other, right? Some systems may be a bit more accurate, some not. But if you have been following a bit all of these Beginner Corners webinars, you will remember that we have presented several different trading strategies from a lot of different experts that use moving averages, fundamental news, another technical indicator, even market behavior, and anyway, they tend to be successful, right? So it's not the combination of indicators, it's how you learn to use them and how you work with them. Always remember what I said about backtesting and understanding what your strategy, get all the information and the numbers. That's really, really important, right? Where to place a stop, where to limit, how many bad trades in a row I can have, okay, and still being inside my statistics. That's what really matters. Anyway, before I continue talking that much, I'm sorry today. Since I have a lot to say, and at the end I'm not saying that much. But anyway, this is quite simple short-term trading strategy that will help us identify the beginning of a movement, right? So first of all, we need to look to the maximums and the minimums of the last 4 sessions, right? Candles or bars, whatever you want to call them, excluding the actual one. So considering the fact that this will be the actual one, right? I will count, 1, 2, 3, 4, right? 1, 2, 3, 4. Right, so I will set my high of the last 4 candles around 26, 20, right? 1, 2, 3, 4, and the low will be the low of this big bullish candle. Okay, around 25.55. Okay, let's say that these are the last 4 candles, excluding actual one, high and low. Okay, not each candle, just the higher high and lower low, right? It's quite simple. Then we need to add a filter, right? I will be waiting for a break of either of both extremes, okay? But I need to add a filter, right? And I will add a simple moving average, just a moving average, a 10 periods one, because as shorter the moving average is, as more weight it will give to the latest market developments, right? And we are talking about trading short-term here, okay? Okay, but in this particular case, I will the simple one, right? Apply to the pivot point, to the typical price, high, low, and close divided 3, right? So it will be a 10 periods moving average, okay? Apply to typical price, okay? So I have my filter, my high and my low, right? I will need to wait, right, to break either above or below my 2 top and low, to make my 2 lines, right? And then assure that the price is at least at 8 pips away, okay, from the typical price, meaning 8 pips away from the moving average. Right now, the moving average is at 25.70. So in this candle, the pair breaks below the support, which is around 25.55. It will be 16 pips away, right? So it's valid. It's valid. If on contrary, I don't know, let's suppose that the minimum of the last 4 candles was here, right, and we were a couple of pips away from the moving average, then I won't be taking the trade, okay? I will take it only if the distance, okay, from the price below or above those supports and resistance, right, are at least 8 pips away of the moving average. If you want to be a bit more conservative, consider a bit more of 8 pips, maybe 10, right, adding the spread usual for this pair in any platform. Anyway, take a bullish position when the price breaks the resistance, of the last 4 sessions maximum, right? Excluding, remember, the actual one, and passes over 8 pips from the moving average. We should be 8 pips away from moving average. In this particular case, even current candle price accelerates about 26.20, will be like 60 pips away, right? So it's pretty money. Taking very bearish positions on the contrary, when the price breaks below the 25.50, supports the lower low of the last 4 hours, right? And 8 pips away from the moving average. Quite easy, quite simple, quite accurate, if you ask me, for euro dollar and pound dollar mostly in the early chart. So anyway, where do you place your stop loss? In this particular case, right, the stop loss must be placed around 17 pips plus spread, okay, under or above your entry point. So let's say that we will say this particular pair right now at 25.53, right? When it breaks below the 54, we actually have the support, right? My stop loss will be of 70 pips plus, the spread, right? When that would be the stop loss. After that, right, you can put a trailing stop every each 15 points the pair advances. That means if the market starts movement the way of our trade, right, and we are 15 pips below our entry point, we should move or stop every 15 pips. I found that moving the stop loss has been pretty profitable for me lately. I usually, I have to be honest with you, I usually set a limit and a stop, very short ones. I do the same, but right now I'm avoiding to place a limit, right? If I'm in front of my computer, I never forget the stop loss, not anymore. I did several times in my videos. And I move my stop loss, okay? Every time the pair advances 15 pips, 10 pips, I move my stop loss, of course, in my direction. That way, I'm finding out that when I'm going on with the trend, of course, the stop loss won't be 2 pips away from current price, right? But I found out that moving the stop loss is giving me more peace, okay, from the mental side, because I know I have my gains protected, and at the same time it's opened me doors to winning more money, okay, with each trade. So I find that that'd be pretty interesting. You have to have the discipline, right, only, okay, that's it. Anyway, as I was saying, first of all, secure the first 10 pips, okay, and then try to move your stop loss, okay, every time the pair advances another 15 pips. This is quite a simple trading strategy, okay, and will be applied mostly when the market is trendy and we have some consolidated stage in the middle, okay. The most likely is the fact that the pair will probably break in the side of the trend. Again, it's not about the trading strategy, it's how you apply it. I would like to okay. Boyke says, why not like exponential moving average? I'm not saying I'm not liking or not using exponential moving average, Boyke. I believe that, as I told you, that indicators are just tools, right? And we will feel comfortable with simple ones or exponential or any other kind of moving average, okay? And that's it. It's no need for much more explanation, okay? Why only for 20%? 20% to consider the break, Boyke, okay? 20% of the intraday range or candle range you are looking at, okay? I do assume that if the price moves 20% away, okay, the certain of the time frame on the study, the certain level is broken. And Philip, yes, I trade naked charts also, okay, in the break of supports and resistance area, okay. why do you use four candles? Four candles because we are talking about short term, right? A short term trading strategy, and I'm waiting market latest behavior rather than previous one. Okay, so that's it. And no, I don't wait FX trades. I don't wait for the candle to close, right? I don't wait for that. It will be enough to if the price moves 8 pips away from the moving average. That will be it. That will do the show, okay? And Boyke says if I prefer trending markets, the fact is I like trending markets because they are more profitable, okay? Sideways markets are sometimes easy because you can play the extremes. But yeah, I do prefer trending markets. The problem is that I think too much. I do believe that we all do. And we start to thinking, okay, it's time for a correction. Okay, it's time for a bottom made in place. And that turns trendy markets a bit scary sometimes, right? Mostly when we have violent movements like we have in Euro, that I don't know how many pips it lost in 2 weeks, right? 800. It's crazy. So at this point, I do believe that everyone is wondering, right, if the euro is going to bounce. But no, I believe not. It's not going to bounce. And with what's going on in rates, no one expects a bounce, but it can happen. How many pips did you stay away from support or resistance level? 6 pips away, or the 20%, as I was saying, of range of the chart on the study. If we are talking about the daily chart, then use 20% of 100, which will be 20 pips, right? If we are talking about 1 hour chart, the early candle moves 30 pips, that will be 6, okay? Philip says that was something. Philip, what you are asking, what I was going to ask you, right? There seems to be thousands of ways of trading profitable, right? And so, what is your favorite trade management strategy? You're asking me what is my favorite one, and I will answer the question. But I was about to ask the same to you guys. You know that there are thousands of ways to trade profitable, right? Which one do you apply? How many times? Okay, how many strategies have you tested? Okay, how many times have you changed the strategy you use? Come on, don't be shy. How many strategies you tested, and how long have you hung on to them? Right? I feel that that's the first mistake or biggest mistake we all do. We tend to test 1, 2, 3, 4, 5, 6 strategies, right? And keep on moving. And Boyke says, have you thought of writing a book? Honestly, yes. I'm working on that, but I won't make any kind of promise I cannot accomplish. But honestly, I'm on that. Okay. Phil says, I think system hopping gets a bad press. I love it, and I found it very informative. Yes, that's not what I trying to say. Okay, learning different systems is great. I do believe that we have learned a lot in here. I have been playing the last couple of months with 2 systems we learned here in the beginner's corner. One is the Greg Michelovsky Trees Crowd strategy. We talked about that a month ago or so, and also I'm playing with what Boris taught us. Remember what Boris said about adding trading for 25 pips during releases of news in euro-dollar? He just used fundamental news. No support, no resistance levels, no nothing. The idea of Boris, for the ones that were not here, is to use round numbers, right, with news. Let's say one every 25 pips, right? 26, 25, 75. Right, I have been testing this. That's what I would like to share. Right, 25, 50, let's say. Right, every 25 pips. Right, and then 25, 25. Okay, every 25 pips, round numbers, no matter the first side of the trade, the first numbers of the equation, right? So what he was saying when he taught the beginner corners, when it comes to the beginner corner to tell us a strategy, is that if there is a report in Euro that will probably make a spike in there, right? If the price breaks, let's go to downside in an example, if it breaks below 26, right? He will set a trade towards 25, 25, 25 pips gain with a 50 pips stop loss, right? If the price before the report is around 25.80, he would sell at 25.25 and go to 25.50, right? 25 pips profit, 50 stop loss. I found out, I was testing that with pound news, right? And the system works like a charm for pound yen, right? It works great, for example, there. And honestly, back to what I was saying before getting into this, the fact is that I'm not against using different trading systems. I'm against jumping from one system to another without understanding why, or because the system you're applying have made you lost a couple of trades, right? So let's say that I teach you one system, right? I know that system can fail 4 times in a row, for example, right? So the first 4 times you apply the system, you got 4 losses. You will discard that system, right? Without backtesting, without believing in the system, without understanding how it works, and you will jump into other. I don't believe that that's a good idea, okay? That's what I was trying to say, Philip. Sorry. Okay? Okay. Anyway, sorry, can you repeat entry and stop loss, please? Yes. The idea of entering into the market with this strategy is once below, sorry, I'll just turn the camera on back and put the correct line, okay? In this particular case, if we are going to sell the pair, if it breaks below the low of the last 4 candles, okay, excluding current one, which will be 1, 2, 3, 4. The low will be this at 25.54, right? And the high of the 4 last candles will be 26.20, right? So I will enter once the price breaks below that low, only if it's 8 pips away at minimum from the moving average, which is at 10 periods 1. That's when I want to get into the market. My stop loss will be of around 17 pips plus spread. Okay, 17 pips plus spread will be my stop loss. And once the market starts moving in my direction, after it moves 10, 15 pips, I will start moving my stop in the same way, 10, 15 pips. Okay, that's how you do it. You set the stop and the limit in this particular trading strategy. Okay, sorry for the mic. I don't know what you are losing sound. Sorry. I think systems open. Okay, you should have to know where to stop. Yeah. Again, I believe that it's pretty clear what I have said, right? I believe that we don't have to discuss that much. It's not the system, it's how you understand what you are doing. Okay? Also, I have been testing, I was saying, I have been testing Boris' system, and I'm testing a lot. I'm playing a lot with the Tris Kraus from Greg, and I found it terribly great, right? Also, but that does not mean I'm not going to keep on with my usual trading. In fact, I have another screen just with those settings, and I'm following as we talk, okay? What Philip says, on a trend trade, how many bars do you expect to stay in the trade on each contract? Of course, that depends if you are a short-term trader and a long-term one, but usually I stayed 4 candles, 4 bars, okay? A signal, when you get into the market, it will last at least 4 candles, average. In between 3, 5, that's mostly used that I usually stay into the market. So if we are talking about a 1-hour chart, that will be 4 hours. If we are talking about a 15-minute chart, that will be 1 hour, okay? And what strike rate is ideal for a good trend trading system? 50% or less. I would say, I'm not sure to understand what you mean by strike rate, but I do know that a trading system should offer you above 70% profitable trades. And that will be it. And there are hundreds, thousands, as you said, above systems like that. Okay. In between 78, 72, that's a good average for any kind of trading percent. Sorry, that's a good average for any kind of trading system. Okay. Anyway, I don't know if you have any other questions. No problem, Philip. I would really like to say, but I want to apologize because I have to be honest. I have to drive my kids and my mother to the airport in a few minutes. Okay, guys? Sorry. So, I have to go right now. I really apologize for that, but it has been great. And yes, it has been recorded as X-ray because we have Adinda here. When Adinda is around, the recording is on. Anyway, thanks guys for being here, and thank you, Borky. I will do. I will run. Okay, I will be a free mom for 4 days. I don't know what I'm going to do with my time. First time in my life. Anyway, thanks. Really, thanks for being here. And anyway, any questions? Okay, you can contact me. I will add my email. Okay. And any suggestions for further webinars are always welcome. Thank you, and bye-bye, guys.